What is up, everyone, and welcome to another Bitcoin market update. In these videos, you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin and others. All right, let's dive into it here with Bitcoin on the weekly time frame. So, as we talked about yesterday, we have this declining bull volume over the last 2 weeks. So, we've had a pretty significant rise in price. So, if we look at from top to bottom here, we take our measurement tool here on the side, we pull that up, we can see that we've risen over 65% off of our low from July 19th. So what that tells us is our low has been set here on the monthly time frame, and from a weekly perspective, it's very likely that we're going to form a higher low if we do end up coming down here over the next few weeks, somewhere above this low from July 19th. So that gives you two different opportunities. One is the opportunity for the top fishing play, which is where you're going short in anticipation that you're going to be setting a weekly high. And then you also have your bottom fishing play, where you're buying at the bottom of where you think we're going to be bouncing from on a lower time frame, which is going to translate to a higher low being set on the weekly time frame. So we'll talk about a couple different areas where we could be bouncing if we go down on the higher low here, to form a higher low here on the weekly time frame. But in terms of the high, I've been very clear with this in my videos over the last couple weeks that I think this pivot here, the R2 pivot, is going to be a resistance zone for price that's going to suppress it, at least on the first test. You can see we did close above it last week, but that does not necessarily invalidate this as a resistance zone. We may still see a close below it this week over the next several days, and we'll see how that ends up playing out on the daily time frame in a moment. But with this, the magnitude of this rise in price, it's unlikely, in my opinion, for us to just continue to just go higher from here. It's far more likely that when you have a rise like this, you'll have to have a pullback relatively soon because you've had 4 straight weeks of bullishness and you're getting that decrease in strength on this rise. So there's less buyers this week than there was the previous week, and there was less buyers this week than the previous week. This is our strongest week of buying pressure right here, July 26th, and that was because we had that short squeeze because there were so many people going short in this zone here. So now that we've kind of exhausted the short squeeze, now it's a matter of how many people are actually buying Bitcoin up at these prices, and if we come down and form a higher low, is that enough for us to continue to go for a higher high thereafter, or are we going to form a lower high and then go down and change the trend back to being a bear trend on the weekly time frame? So let's go to the 3-day time frame and talk about this candlestick right here, which is something I talked about yesterday, and I've been talking about this resistance level for a while now. This gray resistance from March, we started talking about this. I mean, we initially started talking about it, I'm sure, back here when it initially turned into support, but it turned into resistance right on the candle close in May 16th when we closed 2 candlesticks below it. And so now, when we're looking at this candlestick right here, you can see if we pull that across, if we grab our rectangle tool and we snap it to the high and the low of that candle, and we pull that across, we can get our resistance zone. So if we look at this from a resistance zone perspective, we can see that it's never been tested before. So when we come into this for the first time, you can see that we're getting a rejection off of this. And I said this was the most likely scenario to play out, given that we tested this as support. It was a valid level as support twice, and then we've now pushed below it. So now we're kind of getting that rejection. This candle closes in 32 minutes. You can see that this is a very bearish candlestick with a short upper wick, and then the upper wick doesn't really matter in terms of its bearishness, but we have a short upper wick, and then we have a long body here signifying a lot of sell pressure coming off of that zone. So one of the ways that you could have played this resistance zone is you could have went short on the wick of the candle, so the bottommost part of the zone, and if we just take our measurement tool and pull it from that wick down to where we are now, we've already had a 3.38% decline. So that's on spot. So if we were to go short on leverage, let's say it was 3x leverage, that would already be over 10% gain on this trade. So very nice trade so far in terms of that. But remember, everything on this channel is for educational purposes only, is not intended as financial advice. So do your own research and make your own decisions, obviously. But this is a zone that I've been watching for quite some time in terms of resistance, and we're getting that rejection off of that zone. Now it's a matter of how is the volume going to develop over the next 3 days once this candle closes in 31 minutes. Because right now we're seeing declining bull right here and then bear volume beginning. So now it's going to be interesting to see, do we see increasing bear volume next week? And if we do, then we could see a push down further into the lower 4,000s. Or if we see declining bear volume over the next 3 days, we could see a nice bounce there and then go up for a potential higher high and continue the bull trend. So if we look at this from a daily perspective, we can see that we're getting increasing bear volume on the daily time frame, which is not too surprising considering what we talked about yesterday, which was this massive bearish divergence over several highs here that we're getting on the RSI, and then obviously the potential for the rising wedge bearish reversal pattern. So if we draw a trend line right here, we can see that all of these highs pretty much match up with each other here with this ascending trend line. If we draw another trend line down from here up, from that low, and then we line it up with this low right here, we can see that this does indeed match the criterion for a rising wedge pattern, given that we have the highs touching the upper trend line but getting more shallow with each rise. So it means they're not kind of bouncing as high. They're still going for a higher high, but they're getting shallower as we go, and that's that sloping trend line up. And then we have the lower trend line here where the price is bouncing off of it, but every bounce is getting kind of weaker than the last. And so that's what we're seeing here with this potential for a rising wedge. The breakdown is potentially coming today. So this closes in 30 minutes, and you can see we're right on that edge of that trend line. I don't give a lot of validity or weight to trend lines because they're subjective. I mean, I could easily just, move this here, move it, further down. I could move it even, further up and say we're already broken down. It's like you could put it wherever you want. So it's not necessarily something that I'm looking at as like a support or resistance level for price, but it's something that it's just another indicator for me basically to look at and see where price might be moving next. If that ends up breaking down, I would expect further drawdown over the next coming days. And the zone that I'm really keeping an eye on is this black candle right here that we've already tested once as support. So if we zoom in here, we can see our bull trend that we had right here. So we have a low, high, higher low right here, and then higher high with 2 candle closes above this key high, making this a support zone for price, this last down candle before that up move. And you can see right here, we came into it, we bounced, and we came back into that gray resistance zone again, and then we have this sell-off. So daily candlesticks like this are pretty bearish because they're showing you that we rose up and then immediately had a sell-off, and we closed very near where the previous bounce was. And so we didn't have a very sustained bounce. We had a very quick sell-off over the course of one day. So we'll see if over the coming days we push through this resistance zone, because if we do and get a couple candle closes below that, this will turn into a resistance zone for price. The other thing to note on the daily time frame is the Super Guppy indicator, which has not flipped to be in the green just yet, but we are getting very close to that. You can see the EMAs are starting to tighten up here and roll over. Once we get these to turn green, if they do end up turning green, that is a potential area for a buy zone, because this indicator is a collection of exponential moving averages, and when they flip to be in a certain position, the faster EMAs, which in this case are the light blue, and then over here are the dark blue, when those are above the slower EMAs, which are these green ones in this case when you're bullish, and the red ones here when you're bearish, they're telling you that there's strong momentum in one direction or the other. So when you come back into a certain zone, which is the investor EMAs, which is what we're seeing right here, you can see we have that sell-off, 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 and then eventually we push above them. We come back, we test them here, support, boom, we go up for a nice bounce. And if these flip to be green, I would expect a bounce from those EMAs on the first test. So we'll see if we end up getting that over the coming days. That is something I'm keeping an eye on as well. All right, so if we go down to the lower time frames, let's talk about the 4-hour. We'll talk about the main resistance zone above price. Right now, we're seeing some, well, if we look at it, I'm sorry, this keeps. So if we look at this from a support and resistance level, you can see that we have made a resistance level right here with a high, low, lower high, and then lower low pattern here. So now that we have that resistance zone, this is going to be the main resistance zone I'm looking at if we go back above, and that's at 47K roughly, and it goes up to about 47.7. So that it also is in line with that gray resistance zone as well. But you can see, people are starting to try and pull up here and buy Bitcoin near these lows in anticipation that we're going to potentially bounce on the shorter time frames like the 4-hour. If we look at this from an Ichimoku Cloud perspective, we have not had a Kijun bounce yet, which is this red line. So if we end up going into this red line, I'll be interested to see if price actually bounces off of that zone and continues this trend higher. Because the Ichimoku Cloud is a trend following indicator, it would be interesting to see that bounce and then continuation. But because the higher time frames override the lower time frames, and we obviously have that 3-day resistance level right here, and the daily candle looking pretty bearish with increasing bear volume, this smaller time frame indicator might not hold up. So that's something that I am watching to see if we get a bounce from. So that is all I got for this one, guys. If you like this video, give it a like down below and subscribe for future educational content around cryptocurrency and blockchain technology. And if you haven't already, check out our Leutheria Beginner Tactical Analysis course. If you're just getting started trading these crypto assets like Bitcoin, Ethereum, and other altcoins, this is a great course to teach you things like candlestick analysis, volume analysis, trend analysis, and a variety of other topics as well to lay down that foundation of understanding to get started in this burgeoning space. So check that out. You can get 20% off using the link in the description below. And until tomorrow, onward and upward, folks.